Okay, with that, I'm going to go while Dave's getting that set up. I'll go ahead and get started here. Hello, everyone. My name is Colin Brown, and I'm with NACVA and the Consultants Training Institute. We want to welcome each of you to our webinar today. Before we begin today, I'd like to cover a few housekeeping items. The first is how to earn CPE credit. To obtain CPE credit for this webinar, you'll need to answer all the poll questions that will pop up on your screen at random times throughout the session. You are required to answer all questions to verify your attendance and compliance with the standards of NASBA. And then normally we say 7 to 10 business days after the webinar, you'll be able to access and print your CPE certificates by logging into the NACFA portal at nacfa.com. However, we are behind. We've had so many of these free CPE classes on COVID stuff for the last little while that we are at least 2 to 3, maybe even more weeks out. So don't get too excited if you log on. I wouldn't even attempt to log in until at least two and a half weeks. After that, hopefully your CPE credit will be there on the NACFA portal that you can find as you log in. CPE credit will not be issued to attendees who do not complete the required poll questions. If you do have any questions today, during our webinar, you'll be able to submit those questions into the Q&A section of your Zoom toolbar. Please use the Q&A option for relevant questions for our instructor. If you have a generic comment or a technical question or a poll question, you can use the chat feature for those. There are a lot of people on our webinar today, and we'll respond as quickly as possible. Now it's my pleasure to introduce our presenter today, Dave Miles. Dave is the Business Valuation Manager at ValueSource. For the last 20 years, he's worked on developing software, developing web applications, publishing data sets, and providing valuation expertise to both customers and the ValueSource team. Typically, he identifies the what and why of a valuation technique, tool, or database, and then passes on that knowledge. And we are privileged to have him today, so we'll turn the time over to Dave.
Thank you so much there, Colin. Appreciate you being here and letting me do all of this. I don't know if you had time to post the slides. The slides were ready about, a minute before the presentation. So Colin may or may not have posted those on the learning management system. Usually if you go into the upper right corner, you can get those. Also, feel free to email me, dmiles@valuesource.com, and I will be happy to give you the slide deck. Today it's mostly about demonstrations. And so as I go through a lot of that, like I say, the slide deck may or may not be helpful. I know that when I'm trying to get continuing education, though, I always try to get the slide deck just to prove that these were the materials that were handed out. So, feel free to email me. Feel free to look on the LMS system and get those. Also, in the Q&A section, I will pay attention to that today. So if you have something to ask or something to present, comment for the group, feel free to do that in the Q&A section. I will pay attention to that as we go along, and we'll go from there. Now, I'm under the impression that most of you are going to have the software already, and that you're asking about how do I use it better? How do I learn it at a deeper level? And so I'm going to go through the slide deck very quickly and try to say what we designed the software to do. And then I'm going to get into those Q&As and say, okay, what do you want to talk about? What is the rub that you're looking at? And if you haven't purchased the software, hopefully by looking at all of the Q&A stuff and all the little demonstrations that I was going to try to show today, you'll get an idea of how this could make your workflow a little bit faster and a little bit easier. And so one of the things that the software does is it helps guide you through your best practices. And I'm going to show you today how you can customize it and make it for your own presentation, your own workflows. But basically, we have a navigator that goes down the left-hand side. And as you go from top to bottom on that navigator, you get an idea saying, have I considered this? Have I considered this? Have I considered this? And then also inside of there, we have the workflow assumptions. And that's saying, what workflow assumptions do I want to use? And you can set those up. Furthermore, we can automate this process by saying, okay, what do I typically use, and set that up as a template. And then once you do that, you start to gain some quality control over your workflow as well. And so what we're doing by putting all of this into, I should start at the beginning and say, what we've done is we've taken code and wrapped it around Microsoft Office to make it easier and faster to use than Microsoft Office by itself. And so that's really what we're trying to accomplish here with our software. And so there's a lot of things you can do with the functionality that we've put in place. And there's also automation inside of here. So for instance, when you create a historic financial statement, you get to see the common size. You get to see the growth rates that were associated with that common size. So a lot of the ditch digging and the analysis that you would typically do inside of a blank Excel workbook are already done, and you can spend more of your time analyzing that. Another thing that we do really well is we handle the copy and paste problem. And so, you know, if you ask me what is the biggest problem in valuation today, what's the biggest mistake that's being made? Shouldn't say the biggest problem. What's the biggest mistake that's being made out there? I would tell you, theoretically, the benefit stream is not being matched to the discount rate. And, you know, at a theoretical level. And at a practical level, I think it's copy and paste. So one of the things that I do is I talk to thousands of evaluators, and over the years, it's, you know, a lot even more, it's more than even 1,000. But in every case, I've rarely come across a situation where I didn't get a big story on how copy and paste screwed somebody up. I copied that paragraph from the last engagement I did, I put it in this one, and then I didn't update it for today's facts and circumstances. And in doing that, you know what I mean, I've created problems. You know, I've even heard one story where the value was off by millions of dollars. You know, and that's always an embarrassment when that happens. So what we do inside of the software to help eliminate that copy and paste problem is twofold. First is that we take the databases where you typically have to copy the data and paste it into your workbook and then use it from that in that format there. We've taken that and we've automated it so that it's inside of the program itself. It's one-click or mouse click integrations. And the other thing that we've done to help with the copy and paste problem is we've created a report writer, and I'll get to that in a minute. I would also say that when we talk about these databases, and I'm not trying to get up on my platform here and peddle the software, but I do have to say this. There are subscription levels available through NACVA for the different data packages, depending on your practice, how many valuations you do, and what kinds of data you need. That data package that you purchase is available through keyvaluedata.com, and it's also available through the software, and you can access it in both ways. And by being able to access it through keyvaluedata.com, there are analyzer tools out there that go beyond what the software can do. So for instance, we did a webinar here on the market approach. And inside of the market approach, there's several different ways you can analyze that data. One of the ways is using a regression analysis. Now that regression analysis is not inside of the software, but it is inside of the analyzer tool out on keyvaluedata.com. And hopefully today, if I don't do it, make sure you remind me to do it. I'll show you how to take that graph and that information that's inside of that analyzer tool and get it into the report. And so I just want you to be aware that not only does the software exist, but these analyzer tools also exist out on keyvaluedata.com. And all of that goes together to try to make things faster and easier. And in today's world, you know, COVID's putting a lot of pressure on our valuation practice. So as I've been listening, you know what I mean? You have a December 31st valuation and you're saying, okay, I don't have anything to do with COVID. It was not known or knowable. Do I put in, you know, a little sentence to say, hey, it was not known or knowable so that, you know, people know that I know that it exists? Or do I have to do more work? And do I have to do, you know, a second valuation and say, hey, had COVID been known, I did this? Do you put in some more paragraphs and saying, had COVID been known, you know, the price of this could have dramatically dropped 20, 30%? You know, that sort of thing. And when you start doing that extra work to come up with that number, you know what I mean? Will the software and will the other pieces of information help you get there in a faster way? Because putting in that extra time to develop those numbers is definitely going to put pressure on your realization rate. Or you're going to have to bill your client for a lot more time than they were expecting. And this is where we talk about the report. If you're new to the business, there are some templates inside of here, and those are based off of standards. Now, when we say it's standards based, what that means is that, hey, it's going to have the paragraphs and the headings that you need. It's going to have the different language that you need to have inside of there, but you have to go in and customize it for the specific fact pattern that you're looking at. So here are the facts and circumstances of this pizza pie shop in Pueblo, Colorado. And I must, at that point, make sure that my standards, which usually relate to the specific facts and circumstances, are met. One of the nice things about the templates we have is something called content intelligence. And so when you choose an example, let's say that I'm using a market value of invested capital over an equity value, that paragraph, those paragraphs that do that, and actually that was a bad example because the software only calculates equity values. But let's say I'm using a weighted average cost of capital and I'm just adjusting debt to get to the market value of so I come up to a market value of invested capital base, and then I adjust by debt to come down to my equity value. That's what the software does. The paragraphs inside of the report will say, here's how I calculated my weighted average cost of capital, as opposed to saying, oh, here's a multiple that I've multiplied it by. And that's content intelligence. It's done through a functionality called optional content. And optional content is not something we've built out a great deal, but it does exist. I will not necessarily get into that today unless somebody is interested in it, but feel free to email me, contact me. I'll be happy to show you how that content intelligence works. And then you can decide if you want to integrate it into your own reports. What I tend to find is that people who are creating their own reports, and you absolutely must create your own report if you really want to get the benefit of this software, is that you include the 2 or 3 different ways you would describe something and then delete out the paragraphs that you don't want to use. That's how I tell people how to handle the content intelligence. Our biggest functionality inside of the report is that it's hot linked. So as a number changes inside of your workflow, inside of your working papers, all of the numbers that are dependent on that change as well. If I go in and change the growth rate in an income method, a lot of numbers change. If I'm doing a DCF model and the growth rate in that first year changes dramatically, it's going to change the value. As I change the value, that flows through to all the marketability discounts, all of the conclusions of value, all of that stuff where any of that growth rate associated number comes through change, and the report writer will absolutely pick that up. You click a link and everything gets updated, and that's the nice thing about the report writer. And it does that either on a cell by cell basis, or it does that on a range basis, or it does that on a chart basis. So we'll go in and talk about the report writer. One of the things I have a Q&A. Let me dig down into here. It says, have there been any poll questions? And the answer is no, but during the presentation, Colin tells me there's going to be about 6 or 8 of those polling questions that he's going to launch. When they come up and I see them, I'll be happy to announce them. And you must fill those out to get your continuing education. So one of the things, back to the presentation here, one of the things I really like about the software is that it has smart content and flexible content. And so let me tell you about smart content. If I change one of my working assumptions, what changes inside of all of the schedules for a particular methodology? So for instance, if I want to go in and say, I want to choose after-tax cash flows as my benefit stream, I have to make sure that I handle taxes. I have to make sure that I handle, cash flows, which means I have to handle the changes in the balance sheet. And all of that has to open up for me. If I change that from after-tax cash flows to say pre-tax earnings, now all of a sudden I don't have to worry about taxes anymore. And I don't have to worry about, some of those items that are inside of there, the changes in the balance sheet, depreciation, amortization. I just look at pre-tax earnings. And all of that's done, with the question, all of that's done with the just clicking the little radio button. And I really like that about the software. Now, depending on how sophisticated you want to get with the software, and this depends on how many evaluations you do, how big your practice is. Do you have 3 or 4 people working for you? Do you want somebody to work on this? That sort of thing. But it's nice to know that that functionality exists inside of here and that you can build that into your program as well. And when I say your program, I'm saying this is you purchase the functionality and the framework from us, but you get to customize it so much that you can actually make that happen. Some of the other things that are inside of here is smart printing. I don't know if very many people print these days, if they actually print out their working papers, or if they're creating PDF files from their working papers, or if they just keep the Excel sheet and say, here was the Excel sheet I did my work on. One of these days I'll have to put in a polling question about that. Anyway, smart charts. So one of the things that we tend to do inside of our program is we'll handle 10 columns of data, up to 10 years of data. And so you don't want your chart showing 10 years if there's only 5 years of data available. And so those charts will automatically expand and condense to handle however many years you are. So Colin, we have somebody that raised their hand. I'm sure that you're going to take care of that. And here is the first attendance polling question. So make sure you answer that particular question to get your continuing education. And I'm going to continue on with the program here. So we have charts. You can handle 1 year. You can handle 1 year charts, kind of interesting. You don't get to see the trends, but that's how that goes. It's easy to modify, and I'll show you what some of that smart content is. Now, flexible content. Flexible goes to the other side of things and saying, can I modify this for a specific fact pattern? In other words, I have a project file up. Can I actually go out into the Excel sheet and modify it for a particular important point of the fact pattern? And also, can I modify it on a template basis? So a template is a hard concept to understand, but once we understand it, it makes life a lot easier. The template is the beginning thing you start with. So I go to start evaluation engagement. I want to say, program, create a new file for, the pizza pie shop. And the file that it copies to start that is the template. We want it to be empty. We don't want it to revert to any previous numbers. We don't want it to have any information in there. We also want that file to come up and have all of our workflow items already defaulted. So I'm a 5, 4, 3, 2, 1 kind of guy, 5 years kind of guy. So I'll probably put in 5 years and set up my years to be 12, 31, 19 and work my way back for 5 years. And then, on the income methods, I'll put 5, 4, 3, 2, 1. Doesn't mean that I'll use those inside of there. It just means that that's what's already filled out inside of the system. And so my beginning place, my default place is right there. Now I get to go in and analyze that very quickly. And so that is the flexible content, and that is the ability to start with a template. A project file is the file you've actually created from that template and is for the specific fact pattern that you're looking at. And so, in my case here's the pizza pie shop that I'm valuing. That would be my engagement. That would be my project file. It's not a template. It's not where I want to start at every time. And I'll try to make that very clear when I demonstrate how the program works here in a bit. So we have over 18 methods in here. Now, when we say 18 methods, there's 3 approaches, and some of our approaches are a little bit weaker than other approaches, and some of our methods are a little bit more sophisticated than others. There's over 300 schedules inside of this workbook, and what it is a giant Excel workbook with 300 pages on it, and each page is supposed to have a schedule on it that says, here's the thing that I'm trying to accomplish with it. Perhaps our largest schedules are very difficult. Difficult's the wrong word. Complicated is a better word. Are complicated. So for instance, we have a detailed discounted cash flow module. That means that I'm going to forecast the financial statements up. And as I forecast each row, each line item, each balance sheet, each income statement, that gets complicated. And I have to say how I did it and what I did to forecast that going forward. So that's a very complicated schedule. On the other hand, there's some very simple schedules. Hey, here's the owners and what their ownership percentages are. And you can go in and see those. And the only way I can tell you to look at those schedules, start at the top of the navigator, spend an afternoon and just go through each schedule and say, what is the purpose of this working paper? And it's set up to be a working paper that prints out. we're actually working on a new version of the software. Maybe here in the next 3 months, we'll actually have that out and available to folks where no, actually, that's not it. I'm sorry. This is the in-between steps. We're working on a version of the software where we're talking about how to handle this on a workflow process more than on a working paper process. But right now, our Excel workbook is set up so that each of those schedules are a working paper. And we'll talk about some tricks. So one of the big questions that I tend to get is how do I create a calculation report? Do you guys have a calculation report out there? Now, the big deal with the calculation report is simply that what you tell the client you're going to do is what you have to do inside of the working papers as well as inside of the report. And so I don't know how your particular process works in your particular practice, and I can't create a calculation report for you. What I can say is that go in, create a report from our stuff, and I'll show you how to create a template, but you create a report from it and you start to eliminate the paragraphs and the sections that you would not do in your calculation report. So for instance, a lot of times people don't want to talk about the economy. They don't want to do a peer group analysis. They don't want to necessarily discuss the company specifics. They may have a paragraph in there, you know, and just saying, here's what we agreed to for this company, and it does this and this and this. And then they'll have most of the paragraphs in there for the income method, except for, you know, they might say, here's what I did to, you know, do this, and we assumed a company specific risk of 2%. You know, and you can change those paragraphs, put it all into place, and then create your calculation report. You can also do the same thing with the market method and say, okay, I looked in BizComps, I pulled up this SIC code and dropped that into place, and then based off of that SIC code, here's what the you know, the regression line looks like, and put that together. But it has to agree with your engagement letter. It is an agreed upon procedures engagement. And so I don't have a calculation report because, you know, what Joey does down in Alabama is not the same thing that Raphael does over in San Francisco. And I have a question in the Q&A panel, and please, you know, bring that in. And somebody is asking here, are you going to show things in the software, or are you just describing right now? Right now, I'm just describing things and trying to give us a little taste of what's coming up to give an idea. In fact, I'll go faster. So thank you so much for that. You know, some of the other things is that, you know, you might drop the crisp data down into your template, so you don't have to go out there and do the database dropping all the time. You might edit the charts in Excel so that they're prettier, so that they, you know, have 3D and stuff like that. And I would put pictures inside of your report template. One of the big tips that I can give somebody is to create a Word template as well as an analysis template. By creating both of those together, you're going to get the best efficiency and the best realization rate. One of the big tips out there is that you need to use styles inside of Word. Styles are the way you format the text or the content in a Word document. And if you're not using styles inside of your report, then you're using Word like a typewriter, and you're missing out on a lot of the word processing efficiency that's out there. If you don't know styles, it's worthwhile to either get on YouTube and look up styles and go through it, buy a book on styles, buy a course on styles, but learn styles. If you're in the world of creating reports about the accounting, about the valuation, about the forensics, you need to understand how Word works so that you can report that appropriately, and styles is the way to do that. The example I would give is that my daughter in high school was in the IB program. One of the things they have to do is create a essay, research project, if you will, on a paper. And while other people were spending 30 and 40 hours trying to get their document together, she spent 10 or 12 because she understood styles. And so it was a lot easier for her to format that document to make it look right. I would say at the very last thing here that anything you can do inside of Excel, you can do inside of our software. I have yet to come across anything that's different than that. And so at this point here, I will move it over into the software area. I did get a Q&A by somebody saying I did not see the poll question. Colin, I don't know if you want to jump in about that whole browser issue. You were saying on another one of these sessions that if you are using a browser that the polling questions don't come up. Do you want to jump in?
Well, this person probably started late or something, but yeah, if you can't see the polls, then you need to log back out and make sure you allow Zoom to install on your computer. Otherwise, you will not see the polls. And no, we cannot relaunch them, unfortunately. It would mess up the results. So just stay attentive and answer the polls as they come up, and you'll be great.
Thanks so much, Colin. So where I want to start out at is at the end. You know, I was an auditor. That was my background and training. And so I always start with saying, you know, hey, you're telling me where you want to be at, so let me figure out how to get there. Typically, we deliver a report, whether that report is to the IRS, whether that report is to a lawyer, whether that report is to a client who's in the middle of a transaction. We create a report. This is a report that we've brought out from the templates that are included inside of the software. And what I want to show here is that we have little chevrons. These chevrons are the link. Now, I don't know if you've heard me say this before, but inside of our software, you can do everything our software does inside of Microsoft Office. So these links are nothing more than object linking and embedding, except for we've you know, beefed it up, put it on steroids, you know, given it you know, the superpowers of a Power Ranger. In this case here, the name of the company, and if I go over to our analysis sheet, you know, we say it's a child's clothing store. And running all of this information on the same thing can slow my system down a little bit. So when I type in ABC Plumbing over here and I come back to my report, typically I would click on this icon up here on the top and that would update everything. But I'm just going to update a single link because I don't want to spend a lot of time updating all 180 links inside of here. But if I press apply on that particular link, it's going to change from child's clothing store to ABC Plumbing. What I've done here is information that's changed inside of the worksheet, and you saw me change it, and then you saw me update the report, very quickly flows through. And as it flows through, we eliminate a lot of the copy and paste problems that exist before. Now you can create your own links. So if I come over here to the this here is supposed to represent a number, for instance. And if I click on my icon up here on top and I say copy the link, then I go back into the report writer and I say, okay, I bring focus to where I want that. Could be in the middle of a paragraph. And I click on my paste link. It will put that link in there. That's how I've created that link from Microsoft Excel to Microsoft Word. If you were doing this inside of Office by itself, you would say, okay, let me highlight this area, copy, let me go over to the Word document, let me press paste. And then you have to choose a special option out there that says this here is, as it changes inside of Excel, let it change inside of Word. And you're gonna have to deal with the whole problem of where's the source data, where's the you know, target data, and you have to deal with all of those issues. But that's how easy we've made it inside of our report writer. You can also do it with a schedule. And so if I want to bring, you know, let's find something that we would typically show inside of our area here. Let me look at a capitalization rate and say, here's how I've done my capitalization rate. And so, you know, if you want to bring in the titles, that's great. So let me highlight a schedule, click on my item here, and let me paste it into the report by clicking on this. Now, when I paste it into the report, I have several options. I can use that drop-down arrow and create a word table. Why would I do that? A word table will give me more, will give me better ability to format each one of those items. When we paste this in here, we're pasting it as a picture, and that picture will be able to show up. And as it changes, obviously, when I said, you know, update these links, anything that changed inside of that table gets updated as well. I have a Q&A question here. In that example, how would an added industry risk premium to the cap rate? Great question. So let me show you that. And it's a little bit off of the topic of report writers here, but maybe it will be pretty cool out here when I show you what happens. So I come back here into my assumptions. And we'll talk about these in a minute. And in this case here, I want to choose my IRP. So I say, here's my industry risk premium. I come out here to my capitalization rate, and I have my industry risk premium that showed up. So now my schedule changed. If I go back over to my report writer, I'm saying there's no industry risk premium in here. I click on it, I bring focus to it, and I press apply. You'll be able to see that as that change was made, it gets made inside of the Word document. As I said, Zoom's taking up a lot of bandwidth, and so it's taking a minute here. But you can tell that that minus 1.36 is inside of here, and if you were paying attention to the total number, you know that that changed. If that changed, my conclusion of value changed, or my indication of value changed. If my indication of value changed, then probably my conclusion of value changed. Now, when I'm working through this, this all sounds good. This all sounds dandy, and it's saying, wow, you're saving a lot of time, but you have to make sure that your report still reflects that change. So if you're discussing these items in a sense that you don't have to go back and rediscuss them, just the magnitude changed, great. If now, in this case here, we have to discuss an industry risk premium. And so as we look at that industry risk premium, I may have to go to that particular section of the report and add paragraphs about where that industry risk premium came from and how I brought it in. So just remember, you know, copy and paste is good, but you still have the obligation to make sure that your report reflects the work that you did. You can also do this with a chart. I should say that the functionality is that this here is a picture. I had a question yesterday, maybe it was a couple days ago, about how do I bring in a color picture? So right now I'm bringing in a color picture from Word or from Excel. And now let me erase those and let me go over to Excel. Okay. Back on the mouse, back into Excel. And on this particular page here, when I go into page setup, it's printing out in black and white. Now, if I change that from black and white to color, and I press OK, when I come back into the report writer and hit my apply, I'm going to get a colored background. So what does that mean? That means that I can change the formatting inside of Excel and have that formatting come over here. Now, sometimes people want that, sometimes people don't want that. And so you're going to have to decide what you want your report to look like. But if you want to bring the colors from Excel into your report, that's how you would do it. You would set it up to print it out in color, and then that picture comes over here. Again, you can set up a Word table, and inside of that Word table, you can highlight, I think the lady wanted some red items across the top of the table. You could easily do the Word table with this and then put the numbers across the top in red and have things drop down, however you want to present it. That's the functionality of the report writer. And you know, it's pretty impressive when you think about it. And what I'd like to show now is not necessarily our report, but I'd like to show you how to build your own report. So I've gone out to the internet. Oh, wait. There was some question coming up here. It says, do you have to continually hit apply after each change, or is there a more universal apply button after multiple changes in the document? Great question. And I was hitting the individual button because I didn't want it to take all of the time to go through and update all of the links. There was about 1,100 links. Well, 1,100 or 800, depending on which report I grabbed, links inside of there. So when I open a report here, I can open up any document that is available to me. So if I come out here to the desktop, I've picked up a document off of the internet. This document came from the Iowa Department of Transportation. The reason I picked it off of the internet is I searched Google star.docx, and it came up with this. I looked at it and said, wow, I have review notes on here. I have tables on here. As I scroll down, I have a table of contents. I have a title page. I have different, here's my table of contents. And down here, I have a list of tables and a list of figures. All of that's embedded inside of this document. If I can bring this up and create a template with it, then I should be able to prove to you, you can use any of your prior reports, bring them into our report writer, save them as a template. And then the next time you want to use that, you can. So I'm going to come over here to the business profile. I'm going to pick up the name of the company. So I click on my copy link, and then I go back into the report. In this particular cell of the table, I'm going to paste my link, and that's going to be ABC Plumbing. And then here's the button, by the way. Let me see if I can get my tool. The button to update everything is up there. And so when I click on update, it will go through and change all of my links and put those into place. At this point, I simply do a report, save as, and I get the choice between a report, which is my engagement or project, or a template, which is where I start from all the time. This is my beginning point. So I'm going to save this as a template, and I'm going to put template in front of this so that I know. And that's saving it. So now, let's say I have a new engagement over here, and let's change this back to child's clothing store. You can tell I'm real creative today. When I come over to the report, and let me close this so that it's very clear what I'm trying to do. So I've gone out there and I've created a template for my own document. I've created the links for that template. Now I go report new. I'm creating a new report here. It's going to ask me, do I want to use that template I just created? And if I press OK on it, it's going to bring in that particular template. And it's going to use the information I have in my Excel file, my spreadsheet, and it's going to put all of those links into place. And so hopefully what I'm showing you here is how you can start with your template that has the way you like to do things inside of it. You know, here's the way we discuss items. Here's the way we lay things out. Here's the document that has our firm's headings in it, if you will. And you can tell that that is now child's over here inside of this. Obviously, as I went through this whole template, I'd have to input all of my information in here. Things that change from engagement to engagement, I would put in a link. Things that tend to stay the same, for instance, you know, here's the continuing education check number 2. This here is the second of 6 or 8. I forget however many there are, but that was the second one. So make sure you answer that to get the continuing education. As I said, you know, you bring in all of the information, you have your own table of contents. If you're talking about your firm, that information is not going to change. So type in your name and your firm on this particular engagement. However, if something changes, this is for child's clothing store or, you know, Pueblo Pizza Pie or whatever it is over there, you can put that in place. And you can still use all of this information over here. The only thing you have to tell people when they're looking at this document is that they can't type anything in between these 2 chevrons, because when it updates the report, it will erase that and replace it with what's inside of the link. I think I'm getting a couple of questions in the Q&A here. What are the differences between the USPAP report and the NACFA report? Great question. The differences is that we attempted to use the standards. There's 2 places. There's the certifications, and then inside of the opening paragraphs, they said, I've done a report in accordance with USPAP, in accordance with NACFA standards, and we tried to put that into place inside of there. Typically, I think what happens today is there's no real difference. I think we put all of the standards in there and expecting you to delete it out. So that's it. Somebody says, can you have the document have your firm logo on the cover page? And the answer is yes, absolutely. That's what I'm trying to tell you is put your pictures in there, you know, hell, you know, put your picture inside of the report. I think that we don't have enough pictures inside of reports. And I'll be honest with you, I haven't talked to a lot of litigators about that, but I think that pictures inside of a report make the report seem like you've done more work because people can relate to those. Here's my point. I'm creating a calculation report. Okay, what do I typically do? Create a whole conclusion of value report, delete out the pieces that you don't want to use inside of your calculation report, or trim down the paragraphs that talk about your particular calculation, and then save that off as a template. The way you do calculation reports probably does not change from engagement to engagement. The way everybody does calculation reports changes from firm to firm to firm. I believe there's a lot of business, a lot of book on the calculation report. A lot of times a lawyer or family law practices will say, hey, give me a range, you know, so you can say, well, here's the range. I'm going to use a cap rate of 19%, and I'm going to use a cap rate of 23%, and probably somewhere in between there is where you'll end up at. However, if I look at all of the facts and I do all of the research, I might find that it's not in that range. And so you may have a completely different number. But to give you a starting point to negotiate from, here it is. And, you know, by the way, I'm charging you $40,000 for that information. I think you can get my point here. More importantly is I believe that you can get your own reports inside of here, create your own templates, put your picture on the report so people know here's the person that did the work. You know, that's something you'll have to decide whether that works or not. Let me show you another thing that goes on. We have an area over here that is for Excel files. So if I come over here and I open a workbook that's external, now where would I get an external file? An external file is going to come from our analyzer tool. An external file is going to be something that the client generated for you. An external file might be from a database that we don't have rights to or we don't have permission to use. An external file might come from your own analysis outside of this. And so, you know, if you're doing working capital outside of this, or you're doing, let's say, compensation for a doctor's office, a health practice, that all might be outside of this, and you have an Excel workbook out here. When you load up this Excel workbook, this is not meant to be the Excel editor. This is meant to be the access point of saying, I have data inside of here. So if I click on this chart and I go copy the link, and I come back into my report and I say paste that link. Let me find a place here to, I don't know if it will let me do this or not. It's what I get for choosing somebody else's document. There. So now if I pressed paste, I now can create that link inside of here, and that chart will show up. If that chart exists inside of my external workbook and I load up that external workbook for every engagement, it will show up here. So here's my problem. I come in here to Tools, Manage Workbooks. What I have is I have a project file for the analyzer, the analysis, the Excel sheet. So we're expecting to have a project file. That's always going to be workbook 1. The second workbook is going to be your external workbook over here. Yes, you can bring in range names, and yes, you can bring in, you know, the chart has if it's embedded on a worksheet, it'll have its own little place. Excel will know where it's at, so you'll have that. Typically, you're going to want to put charts on their own worksheet tab. That'll make it a little easier for our program to pick up. But the point is that you can make it so that you have these workbooks. Now, when I try to create a template from this, I have to have two sources of data. I have to have my analysis source and I have to have my workbook source. Not usually a problem in practice because you already are generating that. You're saying, hey, I went out there and I got my BizComps file, and so that's where that's at. Here's my regression analysis. Here's the chart that I want to use. That always exists in the same place. It will bring it in, no problem. So I just wanted to show you that that exists. Now, the way this looks in real life is that if I come up here and now I'm getting beyond what you need to know, but I always like to do that. You can tell that our link here says this is a chart. It comes from where's my little drawer tool. This is a chart. Comes from workbook 2, and I showed you that Tools Manage Workbook. Then it says, okay, where do I go? It goes to the template. Sorry about that. Still trying to get used to the way I've changed my, I have to click on it to stop it selecting. This here is going to tell me, do I bring it in black and white and color? And this here is going to tell me, you know, what the width of it is. And then this part over here is the data itself. And then it ends with that particular code there. More than you need to know, but that's how we've built this and how we've brought it into play. The other thing you need to know is styles. So this particular chevron here, if I highlight over the top of it, and now let me see if I can right click and I go into, I thought there was a way to hit into styles. If I click in styles here, it's not going to show it to me that way. Okay, no problem. Going to go into home. I'm going to drop out my styles here. And you can tell that my style on this is RW command. Sorry, the Zoom is creating some issues for me here. So let me delete that out and let me come over here and open up my styles again. So I have my styles box. What I'm trying to show is that chevron is RW command. And if I go in and I try to right click and modify that style, I come over here and I modify the format of the font and I change it from shown to hidden and I click OK and I click OK again. What should have happened is that all of those items inside of there disappear. When I come over here to home and I stop showing my hidden marks, you can tell that my chevrons are gone. Complicated, but that styles is part of the Word functionality and we're just piggybacking off of the top of it. If I want to bring back my chevrons, I come over here to styles. I go down to RW command, if I can find it. There it is. Right click, modify, and I go into formatting the font and I change my chevrons back on. So one of the questions I always get is if I'm working in Microsoft Word by itself, can I get rid of these chevrons? You bet. How do I do that inside of the program? I come over here, view, I turn commands on, I turn commands off. You know, why would we make it hard? As I said, we're trying to make it faster and easier for you to understand, to use the Microsoft Office. And so that's what's going on in the background, and that's how that is set up and works, Microsoft styles. So what that means is that if you go in and you mess with the command and you type through it and you know, like I say, that's a double chevron. If you start typing before it or after it, you're gonna pick up the style of the command and it'll turn hidden on you. All of that stuff that goes on with styles and formatting inside of Word applies. We didn't change any of that. But that's how our links work. That's how you can use an external workbook to get information into this. This is how you can create. I realize that this is all kind of, what do I want to say? It's kind of on the, okay, this is very ethereal. It's very up in the air. I haven't seen that. You know, play with it. Like I said, bring in a little letter that you wrote and see if you can insert some links and insert a second workbook into it and play with it for a half an hour or an hour. And I bet you'll really get a good idea of how this thing works. I have a question here. It says, if that external sheet gets moved on the computer, will this document lose the link and the embedded sheet disappear? Well, what should happen is that it says that you don't have that link and you need to find it. And so let me come over here. Let me do report close or report save because I need to have that second link in there, right? Let me do report close. And so let me rename the external, whoops, it's not gonna let me do it because it's still open inside of here. So let me come over here to the workbooks and close it in the workbooks. And by the way, if you have an external workbook, you can also do it, you know what I'm saying, for a link to a cell, a link to a range, or a link to a chart. So let me rename this. So obviously, if you've moved it or it has a different name, what's going to happen when I come over here to my report writer and I say, let me open up my report. It's going to come up and say you have an error. The error really means we don't know where to get all of the different information from. It says there are one or more errors in your workbook. Would you like to fix this now? I'm going to press yes. And it's going to say, hey, we're missing this external workbook. And so now I can browse for that. And in this case here, I'm just going to select it, open it, and replace it. And it says, okay, I'm good to go. I press okay, and off I go. That's one of the ways we help manage the data is that we're actually saying you're missing this particular piece. We're not going to ignore it. And you get to put information on there. Annotate, let me hit clear all drawings, exit out of that. I hope that answered your question about the external workbook. Hope that answered some other questions about why do I get this error about something not being right. If you open up a report first and then open up your analysis file, your Excel file, you're going to get that message because it's not going to know what to draw data from. So I usually tell people to look at the analysis file first and then open up your report. So I have a question here that says, given that problem, why wouldn't you just create the source workbook directly with the sheet inside the document itself with the data? So let me read that again because I'm not sure I understand it. You would create the source workbook directly with the sheet inside the document itself with the data. I believe that the answer to the question is that you cannot edit it if you create the document inside or so these are HTML type files. If you open up Excel things, you can append and you can put other data inside of here using our VBA code, our C# code. And if you tried to say, hey, here's the sheet and bring it in, you wouldn't be able to edit that sheet. So let's say that this here was a BizComps regression analysis and you were looking at the report and you decided not to use a particular outlier. And so you go back into the spreadsheet, you change that so that the outlier is not used anymore. And now you have a new regression line, a new R² number. And so that's why I don't think we would embed your workbook with the document. If I didn't answer that one the way you thought the question was being phrased, feel free to reach out to me at my email address. I'll be happy to work through exactly what it is you're trying to get to. That's our report writer. Very fast, very cool, lots of items that change on a project by project basis. However, the template exists. So my favorite example these days are SBA loans. SBA loans, it's a grind. I mean, you've got to generate this in 2.5 days. You got to get through it fast. The nice thing is you get the information quickly. If they want that loan, let me tell you what. It's compliance work. And so you have to do all of the information that's required by our standards. But I think you can template it, put it in here, and do it very quickly. And that's how that report writer could help you do that. The other thing I would say about the report writer is that just because you have an analysis file attached doesn't mean there have to be any links to it. You can open up your report writer and have as many, I don't want to say have as many as you want. I think it's limited to like 9 workbooks, but you can have up to 9 workbooks on that. So if there are other things that you do inside of your practice that you need to have a report for. So I'm thinking, hey, I got quarterly write-up. You know what I mean? Is there a quick way for me to do an RMA analysis on this quarterly write-up? You know, if you can get the data into, say, your analysis file, drop in the RMA numbers and say, hey, here's how you stand against your peer group, and then create a little report based off of that, you know what I mean, and send it out. Is that worth half hour of time for your best clients, or maybe just 1 or 2 clients a quarter so that you have a way to go in and talk to them again and keep that touch up? That's something you might think about. Okay. Let me clear my basis. Let me grab, oh great, I appreciate that, Colin. I was gonna grab a drink of water anyway. Here's yours, your CPE poll number 3. And as I look at the time, we have about an hour left. And so I wanna talk about the analysis file. As I said, the analysis file is one giant spreadsheet, one giant Excel spreadsheet. What makes it complicated is that I have to handle a bunch of different states. I have to handle the person who's doing 3 years of data, 5 years of data, 10 years of data. I have to handle people that like to take their data from left to right and right to left. You know, and you might ask, what the hell are you talking about, Dave? So let me come over here to the financial statements and show you exactly what I mean. CPA types like their years to go 14, 15, 16, 17, 18. Economists tend to like it to go 18, 17, 16, 15. And I have to handle that case for both people. The way we do that is going up here to Tools, Options. Now, if you own the software, this is a place you want to look at maybe once or twice and figure out what's going on. On startup, you can have it load the last project. I don't know if most people know that you can do that, but if you change that and you save the file on your way out, it will load that project on the next time you open it. A lot of times in practice, am I using that word right? A lot of times when we're working in our offices, it's not like we're working on 4 or 5 different files. We're working on the same one, you know, 2 or 3 days in a row. We'd like it to load up that last project. You can do that. If you don't want it to check for updates, you can uncheck this here. The analysis is the spreadsheet. The report obviously is the Word document, and the workbooks is obviously that workbook tab that I was telling you about. Underneath analysis, it will tell you where do you want to save your project files and your templates at. The navigator has several different configurations. So if I come over here, let me hit cancel on this and come over to my configure item here, it's just these. And that options box tells me where to start things. If I like an explorer view, if I like a tree view, you know, do I want it to collapse automatically? So when I click on setup up here, it's going to collapse the financial statements that I was at. And you can set that up however you want it to be underneath options. And then new projects. Here's where that chronological, you know, left to right, reverse chronological is inside of here. The reason I think accountants like the chronological years is that it gives you a sense of the hockey stick. You can certainly take charts and reverse the chart from the data and make it so that your charts don't have the hockey stick. Reverse chronological would be the idea of the most important information is leftmost on the sheet. You read it first. And so you would have that in place. And like I say, it just depends on the practitioner, how they like that. Underneath the report, you get file locations, and then you say, okay, as I update the commands, I can ignore empty cells or I can change that. I'm glad I showed you guys this because this here is a nice, easy thing. As I look at the report, what tends to happen to me is I work in a circular pattern. And so in the beginning, I'm hitting that update all, update all, update all, and I may not have done a method or two, but I want to make sure that I have, you know, a pretty good solid draft of what's going on in there before I start to get into my final drafts, and I want to make sure that information is coming in there. If that's the case, I want it to ignore empty cells. However, towards my last update, I may want to uncheck mark that. So if I don't have a particular value filled out inside of the Excel sheet, it's going to throw an error and let me know about that. Workbooks, it's just the location. So that's how you get things from left to right and right to left. And that's set up once. Once it's set up, it holds those values inside of a sticky place. And every time you use the program, it's inside of there. As I said, the easiest thing to do is to spend an hour and maybe 2 hours and just go through top to bottom and say what's going on here and say, oh, here's the business profile. They're just putting down specific information about this particular business. Here's the ownership chart. Okay, so if I get into ownership, how do I set that up? We also have items up here called assumptions. The assumptions are where you go through and say, this is how I'm going to change what I'm thinking of. And this is what I said. Let me make sure that I set this up once as a default, and this is how it typically would come out. And so I can come in here. This is a bad example underneath setup, but you know, if I was underneath my income approach, I would look at the assumption for capitalization of earnings, the single period model, and I would say, okay, I want to set this to after-tax cash flows. I want to set this down here to the Duff & Phelps CRSP data. Furthermore, I would go out to the Duff & Phelps information and I would download my 12/31/19 valuation date. Now, if you use industry risk premium, that's not going to work, okay, because the industry will change from project to project. However, if you're not using an industry risk premium, you can certainly just say, hey, let me download the Duff & Phelps CRSP data once, create my template from it, and then move on. And next year you would update the data again. Point being, you just set up your workflow assumptions inside of here. And the same deal works. Save as template, and then the next time I go to create a project, it's going to ask me which template I want to use. Do I want to use the one I just created? Do I want to use my calculation report template? Do I want to use my, here's a particular way you do something, here's another particular way you don't do something, and you can create those different templates for you. You always have to have the standard template. The standard template is what we update with the newest calculations. One of the nice things about using this software is that thousands of people are looking at it. And so if somebody's digging around somewhere and, nobody's perfect. So every company I know makes mistakes. And, for those 5 or 10 mistakes that we make, there is somebody else out there quality testing it. And, they tell us about it and we do an update. So it says, here's a question in the Q&A thing, and the anonymous person, the person says, it says Duff & Phelps RPR for risk premium report. Can it bring in all of the various data from the Duff & Phelps cost of capital navigator? That's a great question, and let's go ahead and tackle it. I mean, I was going to talk about this underneath the databases, but the way that Duff & Phelps works is that I click on the cost of capital navigator, and it's going to ask me to do a couple of things. It's going to say start. When I say start, it's going to take me out to the Duff & Phelps website. And here I can log in and create my report. Now, I don't really want to take the time to go through the Duff & Phelps report. If you're having trouble with that, we have a couple of YouTube videos that you can look at, but you generate your Excel file. That's what you want to have at the end of the day. After that, you open your Excel file. And I might have a file here that I can use. I don't know. And then it's going to say which items do you want to bring in. Typically, people are going to use the CRSP buildup. My experience is that most people are not going to use CAPM. If that's all you have on here, then bring in my scenario. If you have the risk premium report, we bring in guideline company, 24th, 25th portfolio, or we can use the regression portfolio. And then also we have the idea of the operating margins down there so that you can bring that in. Keep in mind, the program only calculates an equity value. Because it only calculates an equity value, let me bring out my little highlighter tool here. It's important to know this down here. Build up 1, CAPM, build up 3, that's what works. And so all the other methods that are inside of there, I think there's 9 or 12 now. They also have a WACC inside of there now. We don't use those particular methodologies, and because it doesn't go to equity. And that's the reason why you can't bring those in. We also, once you do that, you come over here to your income methods where we're using that. And inside of the assumptions, you get to say, what do you want to use? Duff & Phelps risk premium report. You want to use the CRSP data, and that information will come in based off of what your selections have been, and it will change the information inside of here. So let's say that you're using a WACC, you know what I mean? Well, the WACC isn't going to change because of the information that you've brought in for your equity part of the WAC. And so all of that information will be down here. Again, I did not bring in an industry risk premium for this particular area, and that's why that's that way. I can also type over the top of these, 5% for my industry risk premium. So that could be another way to utilize this. And that would be is to say you go out to Duff and Phelps and you find out your 3 numbers that you typically use. Here's my risk-free rate, here's my equity risk of premium, and here's my 10th decile. You pop that into this and you just call it done. You don't necessarily have to input the data. You can do it however you want. I have another question here. It says, can it bring in different databases such as the MGMA for healthcare data? Great question, Connor. I appreciate it. MGMA is a quality tool to figure out how doctors are working out there and what a typical compensation is and how to bring things together. What I would say about that is that's what that external workbook is for, so that you can drop that down and create a number. And then I assume you're either going to normalize the financial statement or on the benefit stream, you get to adjust it there. Then I had another question here is what percentage of debt? And the answer is no, we don't have a database that we do. You can put in 55% here, and then obviously my weight for the equity dropped to 45. That's just a value of that. And then I put in my long-term interest rate and my tax rate, and you get to input those items. But what that long-term interest rate is, you have to decide. At this point, and since we're talking about weighted average cost of capital, I don't know if most people know this, but when you look at the indicated value, it's going to say, I have a particular, and now I don't know if you can see this or not, because this is Microsoft Excel, the range name over here comes up. And as it brings that range name up, what it's going to do is it's going to try to take that range and make it the same percentage. And I'm having a hard time here. Give me a second. It's going to make it the same percentage as your capitalization rate. And that's called the iteration. So if you don't iterate so that 45% of the value of the company is inside of equity, and you're saying that you're calculating this, there needs to be a reason why you can't adjust your value of equity. That reason would be is hey, I'm using weighted average cost of capital, but I'm using a minority interest where I can't change the borrowing method. And as you can't change the borrowing method, you don't want to iterate. But when I click this button up here, let me get out my annotation tool again. It's called iterate. And when I click on that, it is going to go through the function, and it's going to iterate until 45% of the value actually the value of the company represents 52% of equity. And so it can iterate this and drill it down. You don't need to use a solver tool to get to it. So I always thought that was a cool thing. You just have to decide when you want to iterate and when you want to use the normal weighted average cost of capital, or whether you want to put in what the industry is. And you get to decide all of those things as the expert. And hopefully, I don't know if I said it during the section, but you're the expert. And if you put inputs that are not relevant, that are not reliable, then you're going to get out values that are not relevant and not reliable. And so this doesn't take away the expertise. This simply is a tool that makes things go faster and easier because you get a mouse click as opposed to trying to solve it on your own. So if you had, God forbid, if you had a piece of paper and you had to figure out what the particular weight of debt is and the weight of equity when you're trying to come down to the indicated value and say, do I have 52.53% and that's the value of my equity? What's that going to be at here? So, here's the value of there's the value of debt, and there's the value of equity, I thought. That leads me into another issue that we can talk about too. Anyway, there's another range out there that says market, debt COE and market equity COE. And when we calculate those percentages, that's how it's coming up. If you had to do that on a piece of paper, that would be really crazy. Let me go underneath the hood here. And if I go out to native Excel, this message here, I'll come back to. But what I want to show you is that inside of Excel, what we do is we hide rows and we hide columns. And by hiding those rows and columns, we get to present a working paper that has only the relevant information that's needed. If you choose and you don't like our particular presentation, you can come out here and you can hide a particular row. So if you don't want to see this subtotal here, you know what I mean, you can press 0 on it. Or likewise, you could press 1 over here in column J. Those are the row headers and the column headers. If you didn't want to see this particular, if you don't want to see the titles, you can put a 0 inside of there. In fact, why don't we do that? Because it'll make it seem like it's crazy. And then when I hit return, that pre-display function is going to come back and put things in, and you're saying, hey, these are great numbers, but what happened to all of my titles? And you can do that for a particular column you don't want to see. When might you do that? You might say, oh, look, I have a stub period here that has no meaning in this particular working paper. So you can hide it. You might have a lot more use for it inside of the rows. And so when you have the rows, you'll be able to say, oh, I have some lines out here I don't want to see. Typically happens when we're using a benefit stream like EBITDA with the data from Duff and Phelps. Those are not EBITDA numbers, and there should be an adjustment theoretically between those. And so, that's why you would see that. So anyway, if I put my labels back in, I can come back here and put that out. Likewise, if I want to edit that sheet and add some information onto it, I can add some columns to it, or I can add some rows to it and put in more information. So somebody was talking about the MGMA data, so maybe on a benefit stream page here, you know what I mean? I want to put in a line here that says MGMA. Now we have the ability to do just one line by clicking on adjust, you know what I mean? But you may want to have a separate schedule, or you may want to have a line item. However you want to present that, you can do it, is what I'm trying to get at. But our program, part of the smart content is by clicking on these assumptions, these radio buttons and assumptions, you get to set things up so that it flows through. Now, the cool thing is, and like I say, I'm not going to show you how this works, but let's say that you have your own schedules. Now, you can put your own schedules in here. I'll show you that in a little bit here, but you can put your own schedules in here, whether it's 1 or 2, or whether you want to put in 15 or 20. You can put your own schedules into this and create your own template, and I highly, highly recommend that you do that. If that's the case, maybe you have some items up here. So when I click on this, Duff and Phelps risk premium report, there's a cell on the spreadsheet that gets changed, and it's probably labeled 1, 2, 3, 4, 5. There's probably a 5 being put into that cell, and now I can trigger my formulas off of the value of that cell. So I can say, if VS assumption C142 is equal to 5, then do this because it's risk premium report. And that's how that works. And I can show you how to build those radio buttons. It's all on the spreadsheet. It's pretty easy to do. You can customize it yourself. I've said it in other presentations. I don't know if I said it here. I have many customers who have modified the Excel sheet dramatically. I have one customer who does not use any of our working papers at all. They simply have the 3 sheets that were required for this program's framework to work, and all of the rest of the Excel sheets are his own. And he can actually go through, and he's done his own stuff out there. Sometimes he uses Excel functionality to do things. For instance, he'll have a drop-down radio button, not a radio button, he'll have a drop-down on his Excel sheet that will click things, and he'll trigger off of that. Sometimes he puts a 1 or a 2 in a cell to say, okay, here, use this, don't use that. but you can easily come in here and make it so that these assumptions apply. How these assumptions are created and built, like I say, I can show you how to do that as well. You get into that whole idea of how much time do I want to spend building this thing? How much time do I want to spend buying this thing? There's that whole issue out there, and I get that. But a lot of times what I think should be done is that you buy as much as you can buy so you don't have to put in that effort and that time. And then you crank on the last 20% that makes everything yours, and you know, you utilize that. That's what I'm trying to prove here. That's what I'm trying to show. Q&A, I'm not seeing any Q&A at this point here. So let me come back to kind of the starting point. And that is that if you have financial statements, obviously we have these buttons up on top. It says insert, you'll insert a row. What you need to know about the financial statements is that we have anchor rows. And so there's a formula over here that says sum up, you know, if this column is this, then sum up here. The revenues is that if statement. So when I come over here and I look and I say if G is greater than 0, so if there's something over here, we do it. Let me kick out to Excel. What this button is, or what this message is telling us is that there are certain sheets that are dynamically created. And when they're dynamically created, you're going to have a hard time editing them in Excel and having that same edit go across the other 15 sheets that are created at the same time. So what happens is that over here in our private data area, we have a bunch of 1s, 3s, and that's all where all of those formulas and everything are. We're using kind of codes underneath it to say sum this total up if it's a revenue, sum this total up if it's a cost of goods sold. In this case here, depreciation, if this is a 4, it's a depreciation, and that depreciation is summed up here. That's all the underlying formula. It's very transparent, not saying it's not complicated, just saying it's very transparent. Certainly I could help walk you through it if you needed to know that. If you see a bunch of information in rows 1 through 10, or in columns 1 through 10, you do not want to be editing the structure of the document there. In other words, if I add a row on this sheet, I'm adding it on this sheet here. And let me come back into the program and give you an idea of the other 15 sheets. So when I insert an account on here, which is why I have the button, I'm also inserting it on the income statement adjustments. And so, you know, there's that particular row that I would have put on there, that's on all of those. Underneath financial analysis, there's all of these rows for common size and trends that show up. And those common sizes are built off of that. So the reason that we have that warning message is that in rows 1 through 10 and columns 1 through 10, if we're copying all of that information over, it's because we're actually creating these sheets to look the same way as the historic balance sheet and as this historic income statement. I had a question pop up here. So I assume it's, so I have a question here that says, what's your recommendation for how new users can get up to speed as quickly as possible? Watching training videos from the online site. That's a great question. And what I recommend for people to do is I suggest that you take the navigator and you go from top to bottom on the navigator. And you say, what's this working paper for? Why would I use it? What's this working paper for? Why would I use it? And you're going to find that a lot of the working papers out here, you're not going to use. So let me minimize this and come back to it. So for instance, if I'm using the RMA numbers to do my peer group comparison, personally, I'm not going to use the IRS comparison numbers. And if I tend to have an RMA subscription, I'm probably not going to want to use the IRS comparison anymore. And I would try to figure out a way to hide that. Go up to my assumptions, and I say, you know, don't apply IRS data, don't apply multi-year IRS data. And then when I come back into my navigator tree, it will take the IRS off of there. That would be one example of that. Go from top to bottom, figure out what you use, figure out what you don't use, and see what the working papers are for. At that point, there's just a little bit of functionality that you get to look at. Here is your continuing education check number 4. Make sure you complete all of the continuing education polling questions to get your polling or to get your continuing education. And in a couple weeks, maybe 3 weeks, you'll be able to go out to the portal and get your certificate. Thanks for watching that, Colin. And like I say, the second step is to look at each of the areas and looking at their assumptions at the top. So the assumptions at the top are your workflow. And as you look at your workflow and you say, okay, what happens when I change this? Select the methodology to determine the capitalization rate. Okay, here's a CAPM approach. Do I really want to use a build-up approach? Okay, go into the build-up approach. You know, we all know what that looks like. But see what changes on there. See why that looks the way it does. I think there was a follow-on question, so let me come back to it. It says, is there a limit on the income statement or balance sheets about how many lines of revenue or expense that can be included? That is a great question. And the answer is, you have to have the anchor accounts. The anchor accounts are going to be those bold things at the top: revenue, cost of goods sold, operating expense, that sort of thing. Other than that, you can have as many sub-accounts and as many accounts underneath there. I've not run into a limit yet. I imagine there is at some point, but I've also had one client, he's retired now, God love his soul. Yeah, he did a lot of doctor's practices. And so he would have, I don't know, under income, he would have like Dr. A, and there would be like 25 or 50 different income accounts underneath him. Then you'd have Dr. B, and underneath him there'd be 25 or 50 accounts. This income statement went on for about 12 pages if you were to print it out. So yes, you can have as many on there as you would like. Here's a question. It says, in the RMA data, can you just put in the RMA data for each historic year based on the size of the company? And therefore, and it says, how far back does RMA go in your database if I have to do a valuation at an earlier date? I believe you're asking two questions. And if I get it wrong, I apologize. So let me go into the RMA data and let me look at the income statement. And we have two problems here. The first problem is what year does a subject company have? We can have up to 10 years of data for that. And then the second question is where does the RMA data come from for those particular years? I can do a multi-year analysis. When we study RMA data, we realize that the RMA data is published in November 1st of every year. That November 1st of every year represents data for the 12 months ended between April 1st and March 31st. So in 2020, the year that we're in, March 31st data has been accumulated. It's being processed right now. It's being given over to the RMA. RMA is requesting that data from its member banks. In November, October, November, it processes that data and creates the data set. And it's published on November 1st. So 12 months ending, that means December 31st, 2019 is really inside of that data. You have two ways to look at this. The first way is to say the data is published in 2019, so I'm going to place it against 2019 numbers. The second way to look at that is to say, look, this here data really belongs to the fiscal period of the year before. And if I want to change that anchor date, that's what I call that, that's an anchor date. I'm going to have to go out to Microsoft Excel and do some funny business because we haven't done a good job of making that anchor date work. Again, not in version 9 of the software. We're on version 8. I'm showing you version 8. Version 9 of the software is going to change our underlying architecture. But in version 10, we're going to have a way to change that anchor year. And right now, if you go to the back of our workbooks, there are all of these download pages. And the download page is where the information comes in to download. As we look at that, so this 2012 is the anchor year. So I actually have to copy this data over one column. And I have to be careful about how I do this because, you know, if you Control X and move it, so I have to Control C, move it over one, hit Control V, and then come back to this column and whack it out. And now I've moved my anchor year. And so when I go back into my program, I can have moved my anchor year over one. So when I come back into my comparative statements here, you know, I should have moved over 1 year on this information. And I'm not sure what happened or didn't happen. I'd have to look at it and see, but that's the process for saying, okay, I want 2008 data to line up with 2008 data over here, or I want 2008 RMA to line up with 2009 data on the subject company. I think that's the question you were asking. If not, reach back to me. I'll be happy to walk you through it. I have another question here. It says, if your common size statement has as many lines, how will it go over multiple pages? Now you've asked the question of computers. Computers print out more than we can see on a spreadsheet. No, I got that backwards. We can see more on a spreadsheet than computers will print out. A lot of times people might go to letter or legal size, but typically people are trying to use a portrait size piece of paper to print things out on. And you have this problem no matter what. So when you go into your common size, and it's not going to be just the common size statement, it's also going to be the the income statement and anything else that looks like the income statement. You can come up here to analysis, page setup, current sheet, and that's going to bring up our page setup box. And you can say fit to 1 page by 2 tall, fit to 1 page wide by 4 tall. You can adjust to fit it on normal size. Now, when you do that, it's going to shrink down. In this case here, it's printing landscape and not portrait. So maybe you want to print it on portrait. I'll also give you the secret that when you go out to Excel and you do the same thing on the page setup inside of Excel, you'll get the same parameters showing up inside of our program. So we are using Microsoft Excel's printing capability to get that information out. And so when I come over here, I believe it's on page layout, and I click on my down button here on the ribbon. Wow, it looks exactly the same, huh? This is interesting too, the print quality set up for 600 DPI. I have not had any problems with this, but in litigation, some of those PDF files need to be printed with the correct resolution, the correct reading ability. The fonts need to be a particular way. And, you can use Excel and Word to do that as well. But you can use the page setup inside of Excel, or you can use the page setup inside of our framework to say how many pages long, how many pages wide. And yes, you do have a problem because a lot of times it goes the wrong direction and it's very hard to make it look right. Question is, in your RMA data, can you select between asset sized and sales sized data? And the answer is yes. Let me come over here to my data tab and real quickly bring in the RMA piece. And I want to show you something that I think is really cool. Because inside of our data, we actually show the averages. So when I'm looking at soybean farming and I look at my asset slices, where's my annotation? It's hard to see. So I'm looking at an asset size. I can see what the average net sales is in that asset size. So if I go through my different slices, I might be able to find a better representation. So 2 to 10 million here in assets has a net sales of $10 million. Whereas if I look at sales, and I say, okay, here's my sales. Do I want to come down here, 1 to 3 million or 25 million and over, which means there is no $10 million in sales. This is a perfect example. I got so lucky. Well, where's Las Vegas? There is not a category in here for a $10 million piece. So I come back to my average asset sales, you know what I mean? And what did I forgot what I had selected, 2 to 10 million. I have $10 million in sales. I can use the asset slice as a piece of the revenue slice because we extend the data. I hope that answered your question. Another question here, but is the RMA data based on all, not just asset size compared to the subject, or based on revenues? Next week, pretty sure it's on Thursday, we're going to do a 2-hour comparison on the data. And I will real quickly go through these 2 questions on what's going on with it. RMA data has 2 categories. They have the slice category up here, or they have the historical category. The historical category is going to show you all of the companies inside of that NAICS. The slice is going to take all of those companies and break it out either by sales or break it out by, assets. And so that's what's going on there. Try me next Thursday. You know, I think it's a free seminar as well, 2 hours. Should be very interesting and very fun. I think it's the meat and potatoes of valuation. How updated is the IRS data? It seems to me it's many years behind. Jerry, that's a great question. It brings into play 3 issues. First issue, IRS changed the way it's delivering the IRS Form 1120. So IRS data is based off of Form 1120. It's a statistical sampling of that. Usually takes 3 years to process. Right now, we're stuck with some data that might be 4 years old or 5 years old, simply because we haven't had a chance yet to go in and reprocess the data. In other words, we can get you a size characteristic, we can get you an industry characteristic, but we can't get you an industry characteristic as the intersection of the size characteristic and the industry characteristic. What does that mean? That means that is there a fallacy of recency? In other words, do I have to compare my 2008 data to my 2008 industry codes? And if I do, then do I have to have the latest versions of that? Can I compare, you know, my company to 3 years ago, what was going on 3 years ago? IRS data is based off of every Form 1120 filed in the United States. The statistical sampling of that industry, in my opinion, is much more credible than looking at, you know, let me come over here to the RMA data. I got to move my box here. And it says that there are, I'm having a hard time seeing this. Give me a second. Usually in the, you know, in this particular area, it says that there are 15 companies in this sampling. Do I want to compare myself to all Form 1120s, or do I want to compare myself to 15? Now, it looks a little funny when you're saying, hey, I got 3 years here of uncompared columns, but I'm finding out the strengths and weaknesses of this company. And that industry sampling is going to be much stronger inside of IRS data. I believe that there's a fallacy of recency. And it, like I say, you have to explain it, and you have to say why it's better data. Just because it's older doesn't necessarily make it worse. And if somebody's using RMA data on the other side of the table, you can say, yeah, you had 15 companies, and 15 companies in the United States is supposed to represent the entire industry at this size level inside the country. Okay. And now we're into the real world evaluation work. Why is one persuasive argument better than another persuasive argument? And the answer is how persuasive are you? Great question, Jerry. Great question. Here is polling question number 5. Please answer that for your attendance. And let me come back here to my Q&A. And I think I've answered those questions. Again, next Thursday, great session on all of that databases. And I have about 20 minutes. If there's something you really want to hear about, make sure you get that into the Q&A panel, and I'll be happy to show that. I'm not sure where I left off. Financial statements. The automation happens because when you input your financial statements, all of the other items are automatically filled out, and you get to go through here and look at the analysis of it. I would also say that if you don't necessarily like our particular analysis, what I tend to find is that offices tend to have the same layout that they like. And so let's say that you don't want to have a comparative income statement here that is laid out this way. You like it better the way I showed it in the RMA. No worries. Come over here to Excel. I'm sorry. You could do it in Excel. It's easier to do it in our framework. Fat thumb things. So I have a question here that says, is there an easy way to add multiple rows at once without clicking add every time? And the answer is no. I wish there was a better way to do that. Truth be told, we ran out of development time. So that would have been the next step. And simply to get the product out the door and to start making revenue on value sources side, you know, we decided to do it just one row at a time and not a huge amount of blowback on that. Tools, insert sheet or create sheet. You know, So now I can put in a new format, and I can insert my rows, 25, I can insert my columns, let's say 50, and press OK, and I can create a sheet. On that sheet, I can now go in and say, okay, let me copy information from the historic income statement, put the dollars in column, I don't know what column it would be, column M, column L, and then let me calculate a percentage off of that. Now, it's not going to update automatically, unless you call me and we do some fancy stuff. No, it's still not going to update automatically. You'll have to go in and update this manually every time. But if you copy your formulas down, it will bring that format that you like in. And so you can create that kind of format from here. I'm just trying to point out that you can bring in formats and you can bring in different presentations inside of your template. Now, again, a 20-minute conversation with me, and I'll go out here and show you the fancy stuff. Let me edit in Excel. That navigator is created from a spreadsheet at the very beginning of the book. It is called the navigator, VS Navigator. And so you can go into the navigator and manually create all of these places so that the nodes on the tree match up to the sheets that you insert. So you have the VS Navigator. And as I work my way down here, you should see, setup, assumptions, business profile, ownership, chart. I can insert sheets into the workbook and insert items into the navigator so that they match. And as I create those, I get to build out however many sheets I want. So if you're doing 2 or 3 sheets, it's easier to use that tool's create a sheet. If you're doing 15 or 20 sheets, then maybe you want to come out here to the navigator. Let me click that back. I have a couple questions in here. I have somebody says, when building the report with conclusion of value, how can I minimize the approaches and methodologies being inserted into the report? Great question. Great question. Let me come over here. So what happens is that underneath the appraisal, we have all of the different methods: cap of earnings, market approach, asset approach, and then they all wind down to the conclusion of value. So on the conclusion of value, you can put a weight. If you're a choose one kind of person, you can put the weight of 1 next to the item that you want. If you're a weighted average kind of person, you can do that. Then there's a button up on top. Where's my draw button? It's up here, it's this item here. And when you click on expand condense, what's going to happen is that the items that you're not using will drop out. So let me erase all of my marks, click back on my mouse, come over here to expand condense. So when I'm on expand condense, I get all of my 1s, 2s, and 3s. Those 1s, 2s, and 3s are for our optional content inside of the report writer. And maybe I didn't cover that well enough. So if I put a 3 by all of these, whoops. And then when I come back into the expand condense, those items drop out. So what I'm trying to say is twofold. First is to make this schedule look right, you need to put in those 3s and hide the ones that you don't want to see, okay? Furthermore, when you generate a report for our templates, those 1s, 2s, and 3s will bring in only the items that you said to bring in. In other words, if it's a 1, it will put it under here's how I've estimated the value, and it will put in the paragraphs that respond to that. Then it will go to the appraisal method and look at those assumptions and say, which piece did you use? I used after-tax cash flows as my benefit stream, so we'll bring in the paragraphs that describe after-tax cash flows and not the paragraphs that describe pre-tax earnings. Then it'll go down to the capitalization rate area, and it will say, oh, they used SBBI information here, they did not use Duff and Phelps information, and it will put that into place. And so that's the answer to your question is you come to the conclusion of value, you put 3s by those items that you don't want, and then you go into the assumptions for the ones that are left over and make sure that those are set, then generate the report. If you make a mistake and you're saying, oh, I used a cap of earnings model. That's what the report says. And now I need to use a DCF model. Come back here, put the DCF model on the conclusions page, generate a brand new report, and then copy out the paragraphs for the DCF area and paste those paragraphs into your operating report, the one that had all of the work done in it, and delete out the ones that say cap of earnings. I think that's the correct answer to what you're asking. I have a question out here. Is the IRS data drawn from the 1040, I'm sorry, from the 1120 only? And the answer is yes. Again, next Thursday, be happy to dig into that a little bit better. Another person says, if you multiply decimals of fractions in the cell that are not shown, are your calculations set to the precision display from Excel? Oh, I love this question. We are talking about rounding, and we are talking about levels of precision. And you know, my favorite thing as an auditor, we had calculators. You know, there was a time when people didn't have 10 keys and calculators, but the old 10 keys, you used to be able to have a floating digit, and you used to be able to set that digit to 2. And so if somebody was a floating digit person, you'd set that back to 2, and if somebody had a 2, you'd set it over to floating, and you'd just kind of mess around with it. Here's the answer. Excel will calculate things. So let me come over here to the appraisal and see if I can get to a place. Significant digits is the, I don't want other, I want BizComps. Hopefully there's some information in here. So inside of BizComps, okay, it's actually calculating the download. But if I were to say, let me calculate my own multiplier here, and I go equals, and I want to take the price, and I want to divide it by, you know, in this case here, it looks like we're doing SDE, so we'll just put it on there. And that is my value. Did I do that right? I'm not sure what's going on with that. I was expecting it to calculate a number, you know, more along the lines of 4 or something like that. But significant digits inside of Microsoft Excel, that digit runs way off of the page. And you can make it go way off of the page, but we only show, so, you know, F2, 743 divided by 235. Okay, well, let me just do it this way. Equals 743 divided by 235. Press equals, it's 3.16. But when I come over here to my tool and I start saying, okay, make this bigger, 6267, 70, 702, you know, and I can just make that as big as I want. What's the correct answer? Do I want to round that at 3.16, or do I want to make that go out to as many digits as it can be? And that's the question you're asking me. Most experts say that you only round at the final number, that you don't want to round in the middle of the calculations. It is an incredible issue. I've seen lawyers present on this and say, you know, hey, if your sheet changes that dramatically because you've rounded every single number, I mean, are you really calculating the correct value? And it's an interesting question, but you should pay attention to how many significant digits there are inside of your reports and how you would do that. But most experts will, give me a half a second here. I had to change workplaces real quick before I jumped on the presentation here and I didn't get plugged in all the way. There we go. Most experts will only round the final value and they won't round anywhere else. So I just want to put that out there, but look up significant digits in accounting and see what goes on with that. Like I say, we used to use the digit of 2 on the calculators because, you know, money. I have a thing out here in BizComps. Jack started back in the mid-90s. Do you have access to all of the data or just the last 15 years, for example? Again, a question for next week, but quickly, Jack typically displayed 10 years of data when he sold the data. And so there are people out there that have purchased the data every single year and have all of that data going back that long. I can put you in touch with them if you need to. And I think there's, okay. Now I have about 15 more minutes and I want to make sure that we cover. So I've told you that you can go into analysis, save as template, and that would create your own file. If you don't like our formatting, if you don't like our schedules, you can change those up, put those in here. The advantages of using a template is that you get quality control and standardization. So if you have people working for you, let's say you hire outside experts, you know, not outside experts, let's say you hire an outside guru. Here, you're an accounting student, I'll pay you $10 or $15 an hour, $20 an hour, whatever it is that you feel generous on. Input my financial statements into this program and off you run. Easy to do. That's what the template does for you. What I tend to find is that it's easy to go through something here. So if I was reviewing a report, I would come over here to the financial statements and I would summarize the information. So I would not put in a whole bunch of line items here. For like revenues, I would just type in the total amount of revenues. For the cost of goods sold, probably one line item for cost of goods sold. Probably have 4 items under operating expenses. You know, here's the officer's compensation, probably put in, here's the depreciation, here's the interest amount, here is the, you know, those items that are important to us, amortization if they have it. And then S&A, you know, here's the selling and general expenses. You know, here's all the rest of the expenses and put that in there. Real quickly, put that into that. Then I can go through and I can get an idea in my financial analysis because, and I don't know if this tip I told you about, the summary information is where all of the models are driven from. And so if you can get this summary information to look like the companies that, or the report that you're looking at, you can go in and recalculate all of those items. And then you can go in and do your financial analysis if you need to. Come over here to the income approach. Almost all of the items are done using a single period model. I have a question out here. Is there somewhere we can buy updated templates? And the answer is no. We kind of expect you to do that on your own. We've never really had a marketplace for that. Interesting thought. I don't know if you've heard me speak in the past, but I tend to be an introvert. I take ideas inside, toss them around. I think we've tossed that idea around. We just didn't want to be responsible for other people's math inside of those templates. And by putting our name around them wouldn't be a good idea. That's where I think we came up with that, as I recall. But I'll put it in the back of my head again and see if that's something that we can't create. It seems like today there's more and more sharing going on, if you will. Then I would come over here to my single period model. Typically we use after-tax earnings, but there may be a point where you might want to use you know, pre-tax earnings, something like that. Cash flow means that there's going to be 3 line items for working capital requirements, capital expenditures, and long-term debt. This EBIT, EBITDA, and EBITDA cash flow are set up for M&A type work where EBIT and EBITDA make sense. Typically, if you're doing evaluation of equity, you're not going to be choosing those particular benefit levels, but they are available if you want. So I'm going to leave it at after-tax cash flows. And then most people are going to want to use normalized. Doesn't matter if you have historic and a normalized are the same. This weighted average cost of capital, invested capital, you know, some people like it, some people don't. I will say this, that if you choose it, remember that it's harder to grow an unlevered benefit stream than it is to grow a levered benefit stream. So when you reconcile your single period model from here is my levered stream, the value of the company doesn't change because you lever it or unlever it. That's what I'm trying to say. And if you unlever it, the variable that you're going to want to play with is the growth rate, which brings into play a whole bunch of ideas, a whole bunch of different conflicts in my mind. So if you're trying to say, look, I'm going to remove the leverage out of this, was it possible even to generate the benefit stream that you're seeing on the stream to begin with? And that's the question that I am playing with in my mind of on this particular area with people using weighted average cost of capital. Then I come down here, most people are using a buildup, but if you want to use the CAPM, you can. We have this holdover, the capitalization factor. You know, this is a holdover from the early 2000s, the late 1990s. I have a question here that says, will the report generate an interpolated statement of cash flow from the historical results? Great question. Let me tackle that one. Here is another continuing education poll. Please fill that out. And like I say, in 2 or 3 weeks, check the portal. So underneath financial statements, and I believe it's under summary, we have a summary cash flow statement. Now, when you try to build a cash flow statement, it's pretty easy if you have an income statement in front of you and a balance sheet in front of you. It's pretty difficult when you don't have that. And when you realize that there's several different types of industries and there are several different ways people record stuff. So for instance, depreciation and amortization. You know, when you put that on a cash flow statement, is that the same thing as capital expenditures? And so what we do is that, you know, when we look at our capital expenditures, we're taking a net and we're taking a net on the intangibles. So it's not really a true cash flow statement, and you're not going to really be able to pick out, here is the, you know, what I want to say, the sales of fixed assets on one side, and here are the, you know, purchases of fixed assets on the other side. You're not going to see it gross where you normally would. And that's simply because most times on the income statement, you can't tell that. But that's what we generate, and that's what you can use. It's inside of there. Like I say, it's pretty easy to generate that. The hard part I have is that when you're looking at a client, and you can ask the client, oh, what fixed assets did you purchase last year? You know, you can ask that question and get an answer. But when you're looking at just a P&L and a balance sheet, it's really difficult to figure that out. So we take a net number. And I just wanted to make sure that you're seeing that. I think we do the same thing. I got a bar covering up my equity section here, my financing section. And again, I think we're looking at net. We're not necessarily looking at the gross numbers that are coming in now. I hope I answered your question correctly, that yes, there's a cash flow statement in here. Is it helpful? Yes. Is it complete? It's as complete as I can make it. Another question, will the report, or that was it. And if I just reread the question, says, will the report, I assume you wanted to have a schedule, and then from the schedule, you can paste that over into the report. You can use this blue button up here to go backwards, and you can go back to where you were. So if I go back to my different items, anyway, I set up my capitalization of earnings. I set up the workflow to be what the company has. And then I can real quickly go through and say, on my benefit stream, did they capture what should have been captured? And so, you know, you can say, here's pre-tax income, here's depreciation. You know, did they capture that in the right amount? Usually people are weighting this, so you can put your weighting on this, and you can see what happens as you move your way down. Here's the state tax rate, and here are the changes in the balance sheet. Interesting, we don't do any working capital calculations, don't do any capital expenditure calculations. This would be a great place to insert a sheet, come up with your own approach for that. Is it a percentage of revenue? Is it a percentage of some other number on the balance sheet? Is it a percentage of cost of goods sold? That sort of thing, and you can add those up. Or is it I want to say a two-factor thing? You know, here's a percentage of revenue that we need for working capital, and here's a percentage of payables that we need for capital. Or a percentage of cost of goods sold is where I was at. Then you can look at your capitalization rate and put in the same numbers. The blue font numbers can be overwritten. And so if I want to put a 5 in there, I can type a 5. Here's a trick for you. If I want to bring that back, I click on the idea is tools, restore, or I can use the icon up here, and it will bring back that particular formula. So I can type over those blue font numbers, put in a different number, but bring back the formula that was there before. And here in a second, it should come up. There it is. And in this case here, there is nothing out there for risk-free rate of return inside of the spreadsheet. It's mapping over to either the SBBI numbers or the Duff and Phelps numbers, and obviously nothing's downloaded here. So you can review somebody's item in there. So somebody out here is saying, hey, in my sample file, depreciation is 131 and CapEx is 120. It's pretty hard to sustain that. Absolutely. I don't want to say that our sample file, I think on our sample file, we also have on the indicated value, a controlling interest as well as a discount for lack of marketability. You know, pretty interesting in there. So none of this stuff in the sample file makes sense. I agree with you. Typically in the benefit stream, your capital expenditures needs to be slightly higher than your depreciation rate. And if it's not, you're going to have a hard time running that business. It will be not a successful business is the way I want to say that. Once you put in your cap rate, you put in your growth rate. Again, be careful with your growth rate. There's a lot going on in that particular number. It is one of the key drivers of business value. If you're using a weighted average cost of capital and you're looking at, you know, here's the growth rate of equity, here's the growth rate with or without interest, without the leverage, it's going to be a lot lower than it would be with leverage. And then Grabowski and I forget the professor's name, I think it's Ashok Abbott, went out there and did some work on long-term growth rates. Go into your free Econ Assist and look up conference presentations. Probably will come out in August or September, but last year they had a nice presentation on what's inside of a long-term growth rate and what should that really be. And then it will tell you your indicated value. And obviously we can use some math going back and forth and say, okay, here's the math rate, here's next year's benefit stream, and I must have done something crazy with this particular schedule, I apologize. And then it should bring it into a summary code here, and then it'll apply its minority interest discount, its marketability discount, excess assets would be applied to that. Excess assets is something you should take a look at and make sure that you understand how you're approaching it. It's really easy for an expert to start double counting those items, and our software does not make it easy to follow those through. If you're normalizing them in the financial statements, you have to make sure that over here in the asset and liability adjustments that you're picking up what you really want to pick up as excess and non-operating. And just don't double count them is where I'm kind of coming at. Let me check my Q&A. And I'm not seeing anything in the question and answers. Let me come back to my presentation. Well, I'm not sure I have my presentation up. The reason I want to bring back up the presentation is on the last slide is my email address, and I want to make sure that you have a chance to write that down as I start to close up items here. Email address is up there. Feel free to reach out to me. I enjoy talking about this stuff. Feel free to call me if that's easier. I'd be happy to talk to you that way too. And what I wanted to show today was a whole bunch of different ways to try to take your practice, standardize it, create templates around it. And by creating the templates, you're going to create quality control. It's going to be easier to review other people's work because you're going to know where things are supposed to be. And if they're not there, you'll be able to ask questions about it. Quality control does not mean you eliminate ticking and tying. Just because you put numbers into the software program, you are not going to get a number out that is relevant and reliable without putting in your own expertise. I believe that the other thing the software does is that it automates repetitive tasks. And the question is how many of those tasks you want to put in place for presentation purposes, for your firm's purposes, for analysis purposes that you have to add on to this. I believe we can get you 80% of the way there with no problem. I believe in a lot of cases, we can probably get you 99% of the way there, and you just have to modify each individual project as it comes down the pike at you. That being the case, if you can automate things, automate that report, make it a little easier. Maybe that creates enough extra savings in time to to make that realization rate work for you. I know that there's a lot of pressure these days, especially with COVID and having to maybe do 2 valuations, one with COVID, one without COVID is probably the ultimate would be the best. Probably the worst case scenario is doing 2 valuations. Here's one with COVID, one without COVID, and what is the differences between the two. I have one more Q&A. It says, what do you charge or recommend to charge on average valuation? Jessica, I am not sure I'm the right person to ask for that, simply because I work in a software firm and we sell software and data. And so I don't know what's going on out there. What I can say is a lot depends on what kind of expert you are. I have colleagues who are litigation experts. They start with a blank worksheet. They start with a blank document every engagement. They can charge upwards of $500 an hour. So that's the top end. I have talked to people who do SBA loans, and they tend to charge somewhere around $2,500 or $3,000 for an engagement. So somebody says also can't discuss price in an industry meeting would be considered collusion by FTC. I'm not worried about that. What I've hopefully provided out there is that, hey, there's a huge range of what people charge, and it depends on your marketplace. It depends on where you want to sit in the marketplace. But thanks for that tip about the FTC. As I said, I'm an introvert, so sometimes things kind of grab me after I've already talked a little bit. But yeah, I wouldn't necessarily try to say this is what you should charge. But there's a huge difference in what people do charge for this work. And I think you can charge, what do I want to say? You need to decide where you want to sit strategically inside of this market space. Reach out to me if you have any other questions, if you have any other issues. And at this point here, I think I need to turn it over to Colin to wrap things up.
Great, thank you, Dave. We appreciate everyone attending today. Your CPE stuff will be available in some foreseeable future. I wouldn't even look or ask a question about it for at least, I wouldn't even look if it were me for 3 weeks. We're that far behind. There's about 4,000 CPE certificates that have to be created above, ahead of this one. So there's just a lot that we have done recently with all these free webinars. Anyway, have a great day and stay safe.